Welcome to Spy Tomorrow. We're talking about the dashboard. We have Dane Golden and I'm Rosh Sillars. We are here to share some insights. And Dane is rather new to this little world of mine of creating this dashboard and overnight swing trading. And so he's going to help, kind of bring the maybe the newbie perspective. Would that be the right way to approach it, Dane?
Yeah, we've been talking about this as friends for a long time.
Long time, yeah.
I still don't understand it. And if you can explain it to me, if you can explain it to me, you can explain it to anyone. So I'm going to ask you questions from time to time and say, hold on, what are you talking about?
Yeah, absolutely. And that's fair because, I worked on this day after day, year after year, improving it. And it's gone through many different phases. And it all came from just a simple observation of trends that kind of led me to overnight swing trading. Basically, an idea that, hey, I'm noticing some numbers that I was working with, and when it was positive, the market opened positive the next day. When it was negative, it opened down. And I thought, wow, I could take advantage of this. And I've made mistakes, and I started from really where you are, Dane. Just have an idea and let's keep working it. And then I just kept upgrading, and here we are. And so each day, I think the hope is, Dane, that each Monday we'll meet and watch this go live and see what the pressure reading is live for the next day.
From all indications, you built an amazing tool that really nobody else has. But let's first do our disclaimer dance and say, who the hell are you and why are you giving this advice, or is it not advice at all?
That's a very important part. Advice, absolutely not. I can't give
no advice. This is not advice.
We're not, neither one of us are professional, registered financial people. We are, we're in the media world.
Don't depend on anything I say. I'm just asking questions here.
Yes, but I am the person who's tested it, so I can share. We can obviously share insight when it says up and when it says down. We can give insight into that, of course.
It's based on a tool you've created. You've created a tool that does not make you a financial advisor in any way.
Nope.
There's some parts of this tool you give away for free, and some people pay you for.
Yeah. Every day or trading day at 4:00, it's available for free. And for those who wish to be a part of it beforehand and have more information, now the free is up or down. And if that's all you need at 4:00 and to make an overnight trade, or however you wish to use that information, maybe it's just preparing for the next day. Prepare with the mindset, hey, there's a good chance it could be up tomorrow. What am I going to do? So that's good information. And you can use that as part of other tools too. And so that's really what we're trying to do, is just offer tools and education.
And why the name Spy Tomorrow?
That's a great question. So it's SPY, SPY is what this algorithm is based off of. That's an ETF, which represents a basket of 500 stocks, the S&P 500. And tomorrow, we're spying on what could happen tomorrow. And that's how it started. And so that's what we're trying to do. And that's what we're trading. Overnight swing trading is kind of that point between day trading and longer term swing trading. It's for those who want to be more active, but may not want the ups and downs and the swings of day trading, or even want to stare at a screen during the day. That's a big part of it. And so it's kind of that, it's high risk, high reward trading. Let's not be shy about that fact. Just like day trading, not everybody does it well and can do it well. But I think because you don't have all that emotion, there are a lot of advantages to overnight swing trading. It's a slower approach. So rather than 5 trades during a morning, it's 5 trades, say, over a week.
Explain the difference between day trading in your non-official analysis.
Yeah,
you are not an advisor, but for us dummies, what's the difference between day trading and overnight swing trading, which a lot of people don't know about?
So day trading is simply using It's very similar tools, maybe technical tools that will help you have a sense of where the market might go, and you'll place a trade based off of maybe a moving average or MACD. These are technical tools that traders will use, and if the right signal comes up, they'll buy or sell. Maybe they'll sell short, meaning they think the market's going to go down so they can make a profit. When someone says I'm selling short, that means I'm going to try and make a profit when the market goes down. And so you look for those signals, and then there's often a signal that says, okay, time to sell, let's get out of the trade. And they may do it a few times, really depending. There's so many signals, so many approaches out there, but it can be it can be pretty tough. It's very intense, waiting for that right moment. And sometimes we sabotage ourselves. And a lot of people, will hold on too long and watch their profits go away, or cut their profits too short rather than letting them run. So instead of a bunch of small little increment trades to make money, we're looking for what we refer to as the overnight gap. One trade, buy at the end of the trading day based on the signal, and then sell the next morning. So it's one trade overnight, and it's just based off of one signal. Yes, there is some skill that could be involved, certainly the next morning when you're exiting your trade, but you can also just say, hey, just selling immediately at the end of the morning. I don't want any headaches.
So you're essentially trading while you sleep, essentially, and you look at how the price of a particular stock changes. Commonly, like something happened overnight, and you're like, well, wait, where was I when this trade was happening? I had already, or if you're a day trader, you've already sold,
right?
So then suddenly there's this difference. And that's what you're talking about here.
Yes.
Is that what the swing is called? The difference?
Well, the gap. So the overnight gap. And that's
what it's called, an overnight gap.
Yes. We were referring to the overnight gap. And look, hey, let's be honest. For day traders, one of the things that people like about day trading is that they are out at the end of the day.
Yeah.
And they're not concerned about the market changing overnight. And when I originally started this, the idea was, it's like, okay, what are the big guys doing? What's the big money figuring is going to happen tomorrow?
Yeah.
And so a lot of what we're doing when we're measuring what I refer to as the pressure at the end of the day, a day trader, they're going to try to be right, honestly, 40, 50, sometimes 60% of the time if they're really good. And look, I think we can be better than that and are better than that. There are times we're trading when our signal is 80% correct. That's 4 out of 5 days.
In no way a guarantee, not a guarantee.
No, not at all.
Not a promise.
No, of course.
But who taught you how to do this? Who taught you that this should be a thing? And who taught you how to create this tool, this software package that shows people how to, rate pressure, what you call pressure on the market?
Right. Nobody. No one did. Again, I just kind of was working with numbers, using data that I had at the time. And over time, I've improved the types of data I have access to. But, it was just, again, looking at this trend and trying to find better and better ways. In the early days, I was doing a lot of this by hand. And so over the last year, I've been upgrading it to more of an automated system. And I had a few people working behind the scenes, and we would do this and have it all set up. But there's a lot of pressure at the end of the day to put all these numbers together. And now it's automated. So
there's pressure to determine where the pressure is.
Yes.
So let's this is when you're logged in now. It's 12:22 p.m. Pacific, 3:22 p.m. Eastern.
Yep.
And the market is open or closed?
It is open. And this is the official result from last night. So you can see at the very top. Can you see that, Dane?
I can see all 4 columns, and I can see the top.
It says 12:08. So that was for today. And the idea was 3 of these at the very bottom. These are different algorithms. They're really, CV is the same algorithm. It's kind of like a different flavor of the algorithm. And so two were saying down. We had a positive switch, which is certainly something we can get into in many of our meetings, because it is really important. And actually the secret sauce that I learned about and calculated before I even knew it was a thing. For years, I didn't even know. I just found this thing I called a switch.
You call it the switch.
Because there are times where my algorithm was just doing great, day after day after day. Then all of a sudden, bam, when it said positive, it went negative. When when it went negative and positive, it was just like a switch happened. And it turns out there really is such a thing. And it has to do with the positioning of the market and market makers and so forth. And there is an actual switch, a positive and negative gamma. There are other switches too. There's a Vega switch, but positive negative gamma is usually the one that they use. But as you can see here, for today, it was showing to be a down day. It started up a little, but it immediately went down. And generally, the way we consider correct is if the market hits our direction within the first half hour. So, I mean, if I said, anytime during the day, that would not really be, that's not. But you got to give yourself a little time for the market to set up and go where you think it's going to go. And it did. So within the first 10 minutes, it was down.
From what time Eastern to what time?
So that would be from 9:30 Eastern to 10 o'clock Eastern. During that time is when we're planning on exiting with the market doing what we wanted to do, or trying to find the best position to get out, because maybe overnight the market changed because, say, in the morning there was economic news that changed the mood of the market, or perhaps like Google had earnings, and so there's market moving earnings, or a war broke out in the middle of nowhere. I mean, anything can happen overnight, and that's why some people don't really like overnight trading, because there is always that risk.
And now this, I presume, this being a Monday, December 8th, that this was from, counting back, this was from Friday, December 5th.
Correct.
Telling what would happen at 9:30 a.m. Eastern on December 8th.
Yep.
And was it correct?
Yes, and it was. So it showed a little bit of up pressure. It was a positive switch, meaning things tend to lean positive, but are also a little flat. So actually, and again, this will be great conversation, is that when it's a negative switch, that's really the opportunity to make most of the money. When it's positive, you kind of think of it as a slow slog rolling up the hill. It's usually going to be up, but maybe not up a lot. And it's usually hovering around the zero line, and so you'll get a lot of. Think of it this way. This is the way much of this summer happened. It went up, but it was slow day after day, generally up. And that was a positive gamma.
How do we know, looking at this, that this was correct? Looking at this data here, what tells us that your prediction on Friday was correct on Monday?
So right here, the official CV pressure. CV4 is the one we are currently using. But here's some side.
CV4, that's the name of your choice algorithm for today.
So so you can see CV4, and here it is right here, negative 1.5, and CV6, which is a newer one. In the new year, we're going to have CV7, 8, and 9. Those will probably be replacing these ones. But for now, we look at CV4 because it has the longest track record.
This said SPY was going to go down.
Yes, and it did.
And it did, and where do we know it? So where did it say it was going to go down, and where do we know it went down?
Right here. It says it's going to go down, or the front page of SPY tomorrow.
That was the prediction.
Yeah, so that you can go to the front page. It's not going to show it here, but you'll see this signal right here.
Yeah,
and that's where you'll see it at 4 o'clock afterwards.
Okay. So going back.
Yep. Oops. So. There we go. And there we go. Okay, so we're back here. These are other types of tools we have in here. This is a pressure gauge that kind of gives us pressure of, there's an overall pressure, which kind of often represents and matches the switch. So it wasn't surprising that it started up a little high, but then immediately went down. And then we have, this is a positioning where are people buying calls and puts. we can get more into this another time, the GX
Mhm.
ratio. This is the hurdle rate. The hurdle rate is helpful because it gives you a sense of how far the market has to move for you to be profitable if you're
Oh,
doing a 1 DTE overnight option trade. Because, and there's a lot of conversation that we can get into about options and overnight decay. And so because of the option, if you bought an option, let's say sake of argument, for $1, it may be, if the market didn't move at all, it may be worth 95 cents the next morning. So that means the market has to move a certain amount, otherwise you will not make any money.
now
So
when
this,
we say
yes,
the market, we are referring to the SPY index.
yes.
Please explain further the SPY
Yeah.
index.
So S&P 500 is basically a basket of stocks that have been tracked for many, many years. And they're basically, it's designed to be the top 500 US companies. And eventually ETFs were created in 1993. And I think the first one was the SPY, and that mirrors the S&P 500. And so you could buy, rather than just buy a stock, you could buy this newfangled ETF in 1993, where you could just buy one share of SPY and you would have a piece of all 500 of those individual stocks. So it was a nice way to, it's like a stock mutual fund.
Is it
And
an index fund when people say index fund, or is it something else or similar?
index fund, well, in a sense it is. An index fund quite often comes from the mutual fund world.
Mhm.
And I think it is often applied, uh, honestly, to the SPY, but officially it's an exchange traded fund. It's like a stock versus
Mhm.
a mutual fund.
Okay.
And kind of think of it as kind of in between a mutual fund and an actual individual stock.
Mhm.
But and so there are many of them. There's QQQ, which represents the NASDAQ 100. There are many of them that are out there. IBIT represents Bitcoin, and IWM represents the Russell 2000. So there are many of them now. It's a very popular way and
IBIT
effective way.
is all crypto, or a few cryptos, or
IBIT
just
is just
Bitcoin?
just Bitcoin.
Okay.
They are starting to create some for other types of the cryptocurrency too.
Okay.
So, but that's the main one. So then over here is our overall IV. That's volatility. And it lets you know if there's high or low volatility. This is a good one to keep an eye on to see if there's increasing volatility. That means there's more fear. If there's lower volatility, that means people are more comfortable. And then this is a market pressure gap. And this is what I was talking about here. This market pressure gap gives you a sense as to if the markets could have a big move. So we're trading the overnight gap. And we're hoping for a big move. But if this number
In
is
the direction we want.
yeah. So yeah, a big move in the direction we want. Exactly right, Dane. And so if we have these lower numbers, as you can see, this says suppressed expansion. So it wasn't really expecting much of a open, and it really was a light open. Now it can move after that, but quite often when we have these kinds of numbers, what it's saying is that we may not have that big gap. And if you're using options, again, volatility and movement is our friend, and a flat open is not. So there are other ways to trade it. You could say, okay, well, it may not be much of a move, but we're in a positive gamma environment, so maybe I'll just buy a let's say a leveraged ETF, which means if the market moves up, sake of argument, 0.5%, a 3 times leverage ETFs means you would make a 1.5 or 3 times what the market does. So those are other considerations.
Now it's 12:33 on the Pacific
Yep.
coast and 3:33 on the East Coast.
Yep.
And I always like to say Pacific and Eastern,
Sure.
because we have people that are not on the Eastern seaboard, even though the market is officially there. But also there's people all over the world. So who
Yes.
knows what their where their time zone is. But you have said that these numbers will change at 3:55 p.m.
Correct.
Eastern time. Now, first of all, why 3:55? And what do you do? What button are you going to push to make that happen?
Right. So I made this dashboard for me. Now, this is available for Spy Tomorrow members, but most people, all they need is the front page of Spy Tomorrow for the up or down signal. And why 355? That's the last kind of measurement opportunity that I want to take to give us one time to actually take action if we decide to before the market close. So, for example, on Friday, right here, it's saying negative. So this is going to update at 3:55, and it'll have totally different numbers. But let's say this is our number at negative 0.5. So it means my bias would be down. How I want to play that. What if someone came up to you and said, Dane, I know how the market's going to open tomorrow. And it's going to be kind of a flatter open, but it's going to ultimately be down within the first half hour of the trading day. What would you do with that information? That's the way I approach it. So it's kind of like saying, hey, if I told you the lottery numbers, tonight before they draw them, or
Yes,
good chance, or so it's that kind of.
I have to say that they have the wrong reporters telling me the lottery numbers.
They're not connected.
I want to get the weather reporters on the lottery, because the weather reporters will tell me a few days ahead. Lottery reporters only tell me after. That's the wrong time. That's for me to be provided with information.
Right. So yes. So that's the idea. You're trying to be a little bit of a reporter, but look, this does not predict the future. It only measures what's happening at the end of the trading day.
Why did you decide you built this dashboard for yourself and to share with others? Why did you build it in this way?
Well, very specifically, starting off, I wanted the front page where I would have an up or down signal. That's really what I was going for. But over time, I did realize I need some other information. Like, does the market need to have a big move? It's going to be a big gap. What are those little things? What's the volatility like? And so that's why I created the other stuff. And since we're here on the front page real quick, what I do is I the last 20 days, I put what our prediction was and the result. So if anybody wants to see that, you can go there. But remember, look, if it's wrong, take a look. Maybe there was, like, for example, I think it was Friday. We were pointed down. It was down all until the time in which the economic report was released. And when it was released, the market went up because it was a surprise. It was a surprise.
But how far into the day was that released?
That was before the market opened.
I see. Okay, so it was before the
generally, market release, or generally government reports are released at 8:30. So it's really important to know, after the bell, is there an important company that is going to release their earnings, or is there an important, like, CPI or PPI? These are inflation reports that have been really important and traders have been watching. Are they going to be released the next morning? Well, you need to consider that no matter what in the world is, these measurements are happening. How are you going to maybe hedge yourself? And we can talk more at times about hedging. In other words, protecting yourself both ways, or making it, if there's could be a big move, you could make money either direction. There are ways in which you can do that. And so we want to know what is happening. For example, this week is a great example. I'm going to, just because of experience, say it's going to be a relatively flat market, either up or down, until Wednesday. And there's a reason for that. That's when the Fed is going to let us know if they're going to decrease interest rates or not.
Mhm.
And so after that, I'm going to assume for a little while, we're going to have a much more active market. But between now and then, we're not looking for many big moves.
And great. And tell me again why. Oh, we're still waiting for the 355 update.
Yes.
But what button will you push to make it happen at 355?
So I will then from there. You don't trade from this platform. You'll
No,
have to have your
what I'm
own trading
asking.
account. Yep.
What I'm asking is this page going to update in an automated fashion, or are
Oh
you going to
yes.
update it?
Yeah. Good. Okay. I see what you're saying. Yes. No. It will automatically update. But this one up. The other ones, I should correct myself. The other ones update at 355. This one updates at 356.
Which one? Which
This
one?
one that we're looking at right now.
The second column, the official pressure?
This whole page.
Oh, I
This
see.
whole page updates it because the reason for that is I want all the other updates so for example, here's the members page. This is the page that
Yeah.
most people go to. And
Okay.
so this is what they'll see. This will update pretty much at 355, but there are a
Okay.
lot of different updates to happen. And so
Okay.
because of that, I want all those updates to happen before I take my final look on this board. And so this board actually updates at 356.
356. And
Yep.
then what window of time does someone have to make that trade with their trading service provider?
If you want to do it before the end of the trading day, you have about 4 minutes. If you have 5, if you just use the member page, if you use the member page, you can see the numbers. This is red right now. This will turn green when we have the new reading for Tuesday. So this will be once you see this. If this is all you want, up or down, and a few other readings, you can do so. And then you have about 5 minutes to do your trade, which honestly is plenty of time. I mean, you're going to still be sitting around waiting. Because I usually buy at the very last minute of the trading day. So that's what I'll do then. And I'll decide if I want to buy calls or puts or a leveraged ETF pointing up or down or however I wish to play it at that time.
And you have 5 minutes. So basically, instead of day trading all day, you're trading for 5 minutes.
Yes. And then your trade in the morning too. So, it could be up to a half hour or it could be 10 minutes in total.
And so, okay, so you have to be available at very, very specific times.
Well, definitely available, Dane, at the end of the trading day to buy, but to sell, you could just automatically have it sell in the morning. You could just say, hey, at the market open, it just automatically sells, or I want to wait 15 minutes into the market open. So sometimes I will do exactly that. So you don't, if you're concerned like, hey, I'm leaving in the morning, I can't. Well, then just set it to sell. It doesn't mean you get the optimal price, but you're going to sell.
On the West Coast, I'm not always thinking at my best between the hours of 6 and 6:30 a.m. I might be up, but I might not be thinking my best, or I might have to walk my dog at that time.
Right. So you could just set it and say, hey, 9:45 Eastern time, it just automatically sells, or 9:31. And sometimes I like to watch the trends because sometimes the market kind of peaks at about 11 o'clock. And so I'll set it around, maybe quarter to 11 or something like that. But you got to watch the trends. I mean, the market goes in cycles. And you say, I've seen many people say, oh, I see, every morning the market does this. And sometimes that's the case for weeks and weeks. It starts down and then goes up, or, starts low and goes higher. And they see it over and over again. So they figure that's what the market does. Now, that's just a phase. It's going to change. So you got to keep an eye on it.
Let's go through the free stuff. What do people get for free if they go to your website?
Okay, so free stuff is the homepage.
Are we seeing, even though you're logged in, we're seeing what the logged out user gets?
So this will update.
This shows nothing for now. It's pausing until
till 4 o'clock. So if
because It's 4 o'clock because it's not the free. It's the free version.
Right. And you can, many of the, like Schwab will let you trade for another 15 minutes after the market closes. So you can still make your trade, say at 4:05 if you wish. So those are things you can do. Let's see. Okay, we went through
Well,
this.
now, so I'm a
Yep.
little confused now,
Certainly.
and I know this is true. You told me this before.
Yep.
Does the market close at 4 or after? So I don't understand how, if
Yep.
it's closed, how I can make a trade after it closed.
Yeah, so that's a great question. So there is after hours trading up until 8 o'clock Eastern time, and some markets trade all the time. Like Bitcoin is 24-hour market, and you can. So some accounts will allow you to trade all the way up until 8 and beyond, but you are limited in terms of what you can trade. But here's the thing: companies like Schwab have so much inventory that if me buying an option at 4:05 or 4:10, it's not in the traditional market, but they have extras to sell me in a sense. That's the easy way of putting it. So just know that you are allowed to make this trade without any additional access or
Even
special.
if I'm just Joe Schmo
Yep.
trader,
Yep.
until what time?
4:15.
Okay.
So you can, if you just have a basic account, no special bells and whistles, and you're with Schwab, and there are others that are like that too. You should check with your broker account to see if they allow that or not. Many of them do. Schwab is a big one and allows you to do that.
What else do I get for free?
Well, let's see. I can log out, and so I can, let's see here. We can see some of our labs tools. We do have some portfolio simulation tabs here. So that's fun. That if you just want to see how this works, you can put in your, initial portfolio, position sizes. Position sizing is important. That's one way to protect yourself. Position size, like what, if you have, for sake of argument, a portfolio of $1,000, a position size of 5% is $50, or $100 is 10%, because you don't want to put all of it in. And I always recommend that you have a very specific high risk portfolio, not your retirement account, not money you need for your vacation. It's money that you have set aside for high risk trading. And then you can put in the win rate. Let's say it's like 70%. Say you start with a portfolio of 1,000. Oops. And position sizes of 10, and number of trades 250 for a year. Maximum gain would be say 100%, but if you're doing options, your maximum gain can be 150, 200%. But we'll just go right there, and then your results. So as you can see, there are ups and downs all through it. Those are, you're going to have to deal, but at the end of the trading day, or the year, you should be in an up position. This is based off of $1,000 with a 70% win rate, which is really good. You could say 65 if you feel like that's more. Again, we averaged between 70 and 80 regularly. So
that's not a promise of future performance.
No, it's not. And thank you, Dane, for keep saying that, because it's important to note that none of this, every day trading day is different. And not only that, just because the indicator is correct doesn't mean you were successful, because you still have to get out of your trade, and learning how to do that well is important. So that's why I often recommend people, especially if you're a nervous trader, just set a time and say, on average, I'm just exiting at the open. I'm buying at the end of the trading day, exiting at the open. We don't have to worry about me messing anything up. But but if you have a little bit of day trading skill, you can probably exit yourself out, maybe with a little more profit, or as we like to say, maximize your gains, minimize your losses.
And I'm going to jump off because I have another call, but I'll stay on longer the next time.
Yes.
But before I go, what qualifications do you have, Rosh?
Qualifications other than observing trends and able to code around it all, no more than that. I'm as good of a trader as anyone else and have the same temperaments.
What trading advice are you giving?
None. I'm only offering education to help people understand how to use a signal and ultimately how to overnight swing trade. If you're an aggressive trader, overnight swing trading is a good option compared to day trading.
And the disclaimer for myself is don't do anything I say. I don't know what I'm talking about. I'm just looking at this interesting tool and talking to a guy who uses it and built it.
Yep.
Now stay on
I
for the 12:55 signal to change. So make sure you're on that page, and I will talk to you next time.
All right. Thanks, Dane.
All right.
So we are looking at, he said 12:55 because he is on the West Coast, but we will continue, and in another 6 minutes, we will see that update. Let's see here. Let's get out of the simulation. Actually, let me stop sharing for a moment. And so let's see here. Give me 2 seconds here as we're actually just, kind of waiting for that time frame, but I want to be able to log in here. And I guess we're doing this because I don't necessarily want to show you my personal password. I think that might be an important thing to do to be safety first online here. Let's see. Okay, I am logging in. Very good. And now I can go back to the SV page, the dashboard, my favorite dashboard, and I can now share it again. And here we are. So this is the page that will update. And again, I can go through this. I have traded based off of this pressure reading. And if we did that today, often numbers like this will also say up. So we kind of had some mixed signals here, quite honestly. But I generally recommend that you pick one to work with. And the one that I'm working with right now is the CV4. This is the one that I present, but I also note that we're in a positive gamma. Certainly something we can talk about in future shows. I think it's important, but this was giving a nice little demonstration of, hey, there's some positive pressure here. And also, but this was a little warning sign too. And so I thought, hey, it kind of did exactly what it was saying here. But again, hindsight, kind of 2020, isn't it? So we can see that it's down. There's some mixed signals, and it started up a little bit, but quickly went down. And that's where much of the day ended up. I don't know where we are at the moment. Let me stop sharing, and I can actually take a look. Let's see, stop sharing, and I can take a look on the SPY. Let's see, we're still down. So we're down. It was down most all the day, except for the very first minutes of the day, and it was a down day as we suspected. So, okay, we have about 4 minutes. 4 minutes before we can decide what we're going to do. And what we'll do is decide, one, does it seem like the signals are clear enough? I'm going to tell you that the market pressure gap's probably still going to be low. That's just my guess. I don't know that because we have the Fed later this week that's going to let us know if they're going to cut interest rates and by how much. And so the market's kind of just hanging out until that point in time, which is 2:00 on Wednesday. So I think, whatever you do, I wouldn't put a lot into either the up or down in this kind of a situation. Again, this is my opinion. I'm not telling you what you should do. You should, base your position size, your direction based off the signal that seems to work best for you. And sometimes just that up, down, even like, for example, knowing that we are in a positive gamma. We've been in positive gamma for a while. I will sometimes take, say, a leveraged ETF when we're in a positive environment because options quite often don't work as well in flat environments. And so if I just know we're going to be slogging it up, I may put on a an ETF, a leveraged ETF of 2 or 3 times, like maybe a QQQ. There's the SQQQ, the TQQQ. SQQQ is for short, thinking the market's going to go down, and S for up. And so, or T for up. So in a positive gamma environment, and it's just holding on positive, slogging up, I might just put on a TQQQ and let it ride until we hit a negative gamma environment, which it could switch today because it is a down day, and sometimes on those down days and if the market's getting nervous, it really is, this one little thing right here is such a powerful understanding of knowing what the underlying market is feeling. It was a positive or negative underlying in the switch in where the market is positioned. So just because you have a negative switch doesn't mean you can't have a positive day, and just because you have a positive doesn't mean you can't have a negative day. Like today, it's positive switch, but when you have a positive switch like that, it can really just mean, okay, it could go down, or it could go down like the official pressure, but it may not be a big down. We're not looking at a big crash. Now, if we had a big number here and a negative switch, and then say market gap pressure here is much higher, meaning like there's a lot of movement, then we're saying, okay, we could really have a big move overnight, and we can have that sense. So we may want to actually hedge ourselves, because if it can move big one way, it could also move big the other way, which means, hey, okay, I may be pointing down, but I may hedge myself because maybe some reversal news. Maybe it's big news that put us in a negative gamma. And then we're negative, the market's crashing around us, and then there's some good news. And that good news comes along, and we're going to have a big up. So we know it's like a slingshot, whipsawing, as they like to say, back and forth. But we can see that on our dashboard, and that's helpful. Now, if you don't have this dashboard, you can just kind of look at volatility. If you notice that volatility is going up, well, then you can kind of get a sense of, okay, volatility is going up, 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 and that means that we're probably in a negative switch or negative gamma. And so that's helpful to know. So you can kind of figure it out without having a full dashboard like this. And there are a lot of places that will show you what the volatility is in the market. So there are a number of ways. Okay, we're getting pretty close here. We can actually go to like the member page, and I bet it'll show us what we have. And so, okay, it's showing a little up for Tuesday. So this is it's not a real strong up. Neutral tends to be, depending on the algorithm, 0.75 or 0.50. So that's the negative. This is a little bit higher pressure. And then here is a little bit bearish too. So we'll have to keep an eye on it. Okay, we're 356, and we're going to go to our dashboard. And yeah, as you can see here, these two algorithms are up, down. So I think we're looking up. We're looking up. It may not be a big up. As you can see, the market gap pressure, 2.7. The range expansion is negative, so it's suppressed. But this GX ratio there is down, and the hurdle rates are a little higher than normal. Quite often in just an average, say, environment, you're going to find it under 20. But this weighted pressure, that gives us kind of an up signal. All these numbers together are an up signal. Now, I will say this is kind of odd. When all of these tend to be the same, sometimes it goes negative, oddly enough. But so I'm not, look at there. And we're in a negative switch. So, So we did turn negative. It's been positive for quite a while, and now we're negative. But I'm going to go with the indicator. I'm not going to expect a big move. You can play this any way you wish. Looks like maybe starting off the morning, within the first half hour, we should be up a little bit, but with this kind of data, it shows that, you could have a, kind of that up and down over the center line is what we could see tomorrow. Because again, I don't think we're going to see some big movement really until the Fed. Nobody wants to commit too much. So as you look at these types of, whatever dashboard you use from whoever makes the dashboard, you'll just get to know. I mean, our minds are trained to see these trends, and as you get to know the dashboards, you'll have a good sense of what is, likely to happen. Nothing's ever guaranteed, but you can be more aggressive or conservative based on the numbers, based off of your experience with the numbers that are being presented, and what again, what it is that these dashboards and indicators are telling you. I have a number of, let's see, one last thing before we go, because I have to trade too. As we can see here are all the algorithms, and the newer algorithms into the new year are going to be these gold ones. So look at that. The golds, that gold is down. This is a further out one. This one's up and this one's up. So I'd still look at the up, because this is more of an overnight swing trade gold. This is, think of these are days to expiration. So this is kind of the overnight. This is kind of a mid level, and this is deeper out. So anyway, that's where we are. I hope you've enjoyed the little bit of information we've shared with you today. And, we're going to hopefully do this each Monday starting the new year. Dane sharing his insight and questions. And I'll share with you what I have to share. And again, for education, to help you understand. And again, free on the front page of spytomorrow.com. Up or down signal, if that can support your trading. I hope it does. You have a great day. We'll see you in the next video.